Hello, in today's video we are going to discuss about the different types of joint venture, because generally when we talk about joint venture, what we understand is that there will be two companies which are going to come together and form the separate entity which will be controlled by these two entities, and it is called joint venture. However, the fact is that it is only one of the type of joint venture. There are as per accounting standard 27, there are three types of joint venture. First one is jointly controlled asset, the other one is jointly controlled operation, and the third one is jointly controlled entity. So what we understand by joint venture is only one type of joint venture. So what is jointly controlled asset? In this case, basically two companies will come together, they will have a JV agreement and they will own some assets jointly. In other case, in joint operation, jointly controlled operation, two companies will come and they will jointly operate any asset, and these two, that is jointly controlled asset and jointly controlled operation, are, for example, very popular in oil industry. What they do in oil industries, they come together, they own an asset, that is a gas pipeline or a oil pipeline, and that oil pipeline is being owned by the different entity, which is the example of jointly owned asset. They are not forming any separate entity, they are just owning an asset. And now the second case, these entity will also operate these pipelines jointly. So this example will have two facets. Now one facet is the joint controlled asset, where the two oil companies jointly control the asset, that is gas oil pipeline, and jointly controlled operation, that is they are also operating as per their requirement these pipelines. So yes, that pipeline become the example of jointly controlled asset as well as jointly controlled operation. And in third form, we have jointly controlled entity, where the two entities come, they incorporate third entity, they jointly control the operation of economic affair of that entity, as well as they, obviously since they are the shareholder, so they have the skin in the game in form of they also own the asset of that company. So indirectly they own the asset of the company since they are the shareholder. So finally we have three types of JV, joint venture, that is joint venture by joint control of the asset, joint venture by joint operation of the asset, and joint control of the entity. So yes, that's the three different types of joint venture.